Nonprofit organizations are entities formed to serve the public or a specific mission, not to generate profits for private benefit. Unlike businesses that distribute earnings to owners or shareholders, nonprofits reinvest any surplus revenue back into their operations to further their cause. Nonprofits are typically organized around social causes or to serve the public good in ways that government agencies cannot. Their missions often focus on areas like public welfare, religion, science, education, art, environmental protection, or aid for the less fortunate. They can also be created for non-charitable pursuits, such as sports, hobbies, accreditation, or research. One of the most significant advantages of nonprofit status is tax exemption. The Internal Revenue Service grants tax-exempt status to qualifying organizations, meaning they generally do not pay income taxes on donations received or money earned through fundraising. However, they may still pay taxes on unrelated business income, and employment taxes apply similarly to for-profit organizations. The financial structure of nonprofits is governed by what's called the non-distribution constraint. This means all revenue after expenses must be devoted to furthering the organization's mission. Excess revenue cannot be recognized as profit or paid out as dividends to investors. Nonprofit organizations rely on diverse funding sources to support their work. Donations and charitable contributions form a substantial portion of their income and are often tax-deductible for donors. Many nonprofits also receive grants from federal, state, or private foundations for specific programs. Membership dues provide steady income for associations, while fundraising events like galas or marathons generate additional revenue. Some nonprofits earn program service revenue from mission-related activities, form corporate partnerships, or generate investment income from endowments. A common question is whether nonprofit and not-for-profit mean the same thing. In most cases, these terms can be used interchangeably. Not-for-profit is generally a broader term that includes nonprofit organizations and refers to any activity that does not generate profits for distribution. Understanding the differences between nonprofit and for-profit entities is essential. While for-profits exist to generate profit for owners or shareholders, nonprofits serve a public or specific mission. For-profits have individual ownership, whereas no individual owns a nonprofit. For-profits distribute profits to owners and investors, while nonprofits reinvest all surplus into their mission. For-profits pay corporate taxes, but nonprofits are often tax-exempt. Nonprofits must publicly disclose their finances, while for-profits have fewer transparency requirements. Starting a nonprofit organization involves several steps. First, draft a mission statement explaining your purpose. Then write a business plan detailing how you'll achieve that mission. Create a board of directors with clearly defined roles and responsibilities. Incorporate your nonprofit by filing articles of incorporation with your state. Apply for tax-exempt status with the IRS, which typically costs between $400 and $850 depending on projected income. Register with your state's agency overseeing charitable organizations and prepare for annual reporting requirements such as IRS Form 990. When forming a nonprofit, avoid common mistakes like having an unclear mission statement, inadequate governance structure, failure to register with state authorities, non-compliance with IRS requirements, mixing personal and organizational finances, and over-reliance on a single funding source. The IRS recognizes many types of nonprofit organizations. The most common are 501c3 organizations, which must be organized exclusively for charitable, religious, educational, scientific, literary, or other specific purposes. Other types include civic leagues, labor organizations, business leagues, social clubs, fraternal societies, and veterans organizations. Some well-known nonprofits include Amnesty International, which prevents human rights abuses, the Bill and Melinda Gates Foundation, which enhances healthcare and reduces poverty, the Red Cross, which alleviates human suffering, and the Worldwide Fund for Nature, which promotes environmental conservation. A common misconception is that nonprofits cannot earn a profit. In fact, they can generate surplus revenue, but it must be used exclusively to further the organization's mission. This might include expanding services, building financial reserves, funding future programs, or investing in organizational improvements. Nonprofits have significant legal responsibilities. Board members have fiduciary duties of care, loyalty, and obedience to the organization's mission. Most tax-exempt nonprofits must file annual reports with the IRS. They must comply with employment laws, maintain accurate records, and follow state requirements. 501c3 organizations face restrictions on political activities and lobbying. Nonprofit organizations play a vital role in society by addressing needs that government and for-profit entities cannot or do not fulfill. They operate with a mission-driven focus rather than a profit motive, reinvesting all surplus revenue into serving their cause. While they share some operational similarities with businesses, their unique tax status, governance structure, and public service orientation set them apart as essential components of our social fabric.